Good morning, investors. You are now on KleverStock with me, Ainun serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Malaysia's blue chip index opened higher for an 8th straight session on Thursday, buoyed by fresh record highs on Wall Street and growing optimism that the U.S. Federal Reserve will cut interest rates in September. Overnight, the S&P 500 gained 0.32%, while the Nasdaq rose 0.14%, both ending at fresh record highs after a softer-than-expected U.S. inflation report strengthened expectations on a rate cut at the Fed's next monetary policy meeting. On Bursa Malaysia, the FPM KLCI, which has rallied for 7 consecutive sessions, opened 0.31 points higher at 1,586.91, signaling continued upward momentum. Gains, however, may be capped as analysts flag overbought conditions in domestic stocks, prompting some investors to lock in recent profits. TA Securities said immediate resistance remains at 1,610, the 76.4% Fibonacci retracement FR, with the next upside hurdle at December 2024's peak of 1,644, followed by stronger resistance at 1,684. Immediate support is seen at the 50% FR level of 1,527, with stronger supports at the 38.2% FR 1,490 and 23.6% FR 1,444. Rakuten Trade expects the index to soon test the 1,600 level, which could lift overall trading volume. We expect buying momentum to persist, hence expect the index to hover within the 1,580 to 1,600 range today. This was said by the brokerage. Leading early gains included VSTECS, which surged 19 cents to 3 ringgit and 60 cents after reporting a positive quarterly result, and MISC, which rose 7 cents to 7 ringgit and 81 cents. Data Edge advanced 6 cents to 96 cents, while British American Tobacco gained 6 cents to 5 ringgit and 3 cents. Among the most active counters, Oxford Inotech added 3 cents to 41 cents, and Touche edged up half a cent to 3.5 cents, and iSense climbed half a cent to 43 cents. We shall now look at the performance of our local currency. The ringgit opened almost unchanged against the US dollar on Thursday as investors adopted a cautious stance after recent gains, despite mounting speculation that the US Federal Reserve will cut interest rates in September. At 8:05 a.m., the local currency slipped marginally to 4.2045 or 4.2160 versus the greenback, compared to Wednesday's close of 4.2040 or 4.2085. Bank Muamalah Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said the market's subdued tone reflected lingering uncertainty over the Fed's next policy decision, even as expectations for a rate cut gain traction. The odds for a U.S. interest rate cuts are gaining momentum, especially following remarks from U.S. Treasury Secretary Scott Bessent, who suggested that the Fed should reduce the Fed funds rate by 50 basis points at the next Federal Open Market Committee FOMC meeting. He noted that while the Fed operates independently and the Treasury Secretary has no formal authority over monetary policy, Bessent's comments signaled a weakening U.S. economy that could warrant intervention. As such, the ringgit is poised for further appreciation. Yesterday, the ringgit appreciated against the greenback by 0.57% to 4 ringgit and 20 cents. The USD MYR might dip below 4 ringgit and 20 cents given the increasing prospects for a US rate cut. In early trade, the ringgit was mostly weaker against major currencies, declining to 2.8608 or 2.8688 versus the Japanese yen, and easing to 5.7106 or 5.7662 against the British pound. It, however, strengthened against the euro to 4.9243 or 4.9378. Against regional peers, the ringgit gained to 3.2858 or 3.2953 against the Singapore dollar and inched up to 13.025335 or 13.0700 against the Thai baht. It was nearly unchanged versus the Indonesian rupiah at 259.4 or 260.3 and flat against the Philippine peso at 7.41 or 7.43. Moving on to economic updates, Bank Negara Malaysia (BNM) is likely to maintain its 2025 full-year gross domestic product (GDP) growth target, even as economists warn of a slowdown in the second half of the year driven by weaker manufacturing, mining and exports. The Central Bank and the Department of Statistics Malaysia DOSM will release second quarter GDP data tomorrow, with projections pointing close to DOSM's advanced estimate of 4.5%, supported by resilient services and construction activity. Socioeconomic Research Center (SERC) Executive Director Lee Hang-gue forecasts second quarter growth at about 4.4%, citing steady services growth of around 5% in sectors such as restaurants, transports, communication, real estate, and business services. Construction is expected to register double-digit gains through slightly softer than first quarter. However, Lee warned that exports will remain a drag due to the newly implemented 19% tariff, US-China trade tensions, and slowing global demand. There's a lot of uncertainty, particularly over China's final tariff outcome. This could intensify competition pressures for ASEAN exporters to the US. Despite these headwinds, domestic consumption is expected to stay robust, supported by the government's 100 ringgit cash handout to all citizens in late August. Lee maintains full-year GDP forecast at 4%, with potential upside to 4.1% and to 4.3%, although 4.5% would be a stretch. He described BNM's recent 25 basis point in an overnight policy rate OPR as a preemptive move to safeguard growth from slipping below 4% and does not anticipate further cuts this year. OCBC senior ASEAN economist Lavanya Venkateshwaran expects BNM to keep its growth target of 4% to 4.8% when the second data is released. However, she projects GDP growth to slow to 3.5% in the H2 from the 4.4% in H1 as export front loading fades and uncertainty dampens investment plans. Lavanya sees low recession risk thanks to strong labor markets and reform momentum, but OCBC is penciling in another 25 basis point rate cut if a sharper slowdown materializes. If delayed into early 2026, the cut could be deferred to the first half of the year. And now moving on to business news updates. MAGMA Group Berhad has completed its 379.21 million ringgit capital reduction exercise, a strategic move to fortify its balance sheet and enhance financial flexibility as it pursues long-term growth opportunities. The move follows shareholder approval with a special resolution at the March 21st extraordinary general meeting and the subsequent lodging of a High Court sealed order with the company's commission on August 13. Under the exercise, the company's issued share capital was reduced to 669.15 but was reduced to 669.15 million to 289.94 million ringgit, with the total number of shares unchanged at 1.68 billion. MAGMA stressed that the move has no impact on shareholders' equity ownerships or voting rights. Group Managing Director and CEO Datuk Sri Thomas Liang Chi Fong described as the capital reduction as an important step in the group's transformation journey. With a stronger balance sheet, we can just accelerate our Chaji joint venture rollout, unlock value from our Mont Kiara land bank, and pursue high potential opportunities in hospitality and property, all with the global delivery sustainable returns to our shareholders. MAGMA clarified that the exercise did not involve any share cancellations or changes to the shareholding structure. Instead, it streamlines the company's capital base, strengthens balance sheet efficiency, and improves key financial ratios. With the exercise now complete, the group said it will focus on scaling its lifestyle food and beverage ventures, growing its hospitality portfolio, and unlocking value from the property assets in the coming quarters. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Iris Corporation Berhad failed in its appeal against a High Court decision to dismiss its lawsuit against 9 former directors over losses from subscribing shares in UK-based firm. Tenaga Nasional Berhad will maintain its regulated profit margin at 7.3% during the RP4 from 2025 to 2027, and the profits from this rate will be returned to consumers via the Electricity Industry Fund. Mr. DIY Group M Berhad saw its second quarter financial year 2025 net profit rise 2.2% year-on-year to 158.6 million ringgit from 155.2 million ringgit as higher revenue and margin gains offset increased administrative and operating expenses. SUNLOGY Berhad said its joint development of a 155 megawatt large-scale solar photovoltaic power plant in Long Lama, Beram, Sarawak will cost 488.2 million ringgit, and the project will be funded 80% via bank borrowings and 20% from internal funds. Petronas Chemicals Group Berhad posted a 1.08 billion ringgit net loss in the second quarter of financial year 2025 versus a 777 million net profit a year earlier, weighed by lower sales volumes, weaker product prices, asset impairments, and unrealized forex losses. Now that's a wrap for more development updates with me, Ainin Jari on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.